not in OPEC, and
yes, I mean there's a lot of outside supply outside of OPEC.
But when you look at West Africa, when it comes to sweet crude, and when you look at the excess reserves and the excess production in Saudi Arabia, OPEC will always be relevant. You know, that the cartel has always had a very strong influence on how oil prices are dictated. Other countries are definitely developing their resources, but the OPEC states have shown a certain commitment and a certain will to swing oil prices over time.
Yeah, while they're swinging the oil prices, remember that many of their customers, the U.S., many countries in Europe, China, and in Asia, they're not happy that we have the oil prices, are still over $100 per barrel. I mean, these are economies that are, they're huge economies, especially in Asia, India. We're going to see growth going forward. They're looking at alternative sources of energy. They're looking to actually force these prices down if they can. So, I mean, we're still here talking about, we're producing more, trying to fight to produce more, but while our customers are there thinking about how to push these prices down, and perhaps even stop buying our oil.
This conversation has been going on
But it looks more real now. It looks more real now.
It looked real when...
Nobody saw the shale oil production, happening, but the U.S. has discovered that, and they're stepping up on that. So very soon, because I've heard President Barack Obama, when he came in for the second term, say that he's going to free America from international oil. That's a very strong statement, and he's actually putting his money where his mouth is.
Yeah, I think the $125 oil price mark definitely got America thinking about shale oil. But I think the OPEC and the United States are going to come to a compromise over time. If we look at trajectories and trends over the last 30 years, we'll see, oil has always been, been the way. OPEC country oil has always been the way to go. So that's key.
What are your thoughts on Saudi Arabia being the biggest producer? They determine a lot in terms of keeping prices at a certain level. But we see sanctions on Iran, and Saudi Arabia steps in and overproduces. How do you think they can reach a compromise? Because it seems that there's a lot of internal discord, and some people are questioning, can this group or will this group stay together for long? Because over time, disgruntled members, I mean, it's all about money at the end of the day. How much more we can make from this oil that we all 12 of us make, from this commodity. So do you think that perhaps this is a potential threat to the unity of this group?
The unity, it'll stay unified. I think they are stronger as a group, and that's just a fact. If they all break up, the pricing of commodities or pricing of the oil commodities will be very, it's tougher to regulate. And
so the world still needs an OPEC.
The OPEC is needed so that the prices, I guess, don't completely crash. Because you can say there are excess there's excess crude out there, and it's just not being developed or being harnessed or being shipped. So they need an OPEC to keep those prices high and just manage those prices.
Just keep the market
and
regulated.
their economies are heavily reliant on it. So if they break apart, they're definitely in big trouble.
Well, the economies are reliant on it, but we do know quite a number of them, especially those in the Arab nations. Well, they have sovereign wealth funds. They have invested. They've taken advantage of that oil, their resource, that oil. We in Africa haven't exactly done that. So it would seem that on our part, we're more desperate, as it were, to have oil prices high and perhaps to remain in the cartel and to put out as much as we can. So for us, it's definitely a different dynamic for us.
But we need to get our framework in place. We need to pass the PIB. We need to start
building
PIB. We need to start building our refineries. We need to start diversifying those oil revenues so we can generate tax revenues from various sources. We need to get our act in order. We need to set a disciplined framework that can get us where we need to go. If we don't do this, we will be overly reliant on OPEC and we'll be overly reliant on oil. And if we look at different statistics, this oil production doesn't necessarily mean GDP growth and doesn't necessarily mean economic growth. You need to.
But it's very key for us because that determines how much in terms of expenditure what we're going to earn. We know 90 or at least over 80% of our
it's pegged to
it comes from oil revenues. So definitely it's still a key factor for us. Well, does it bother you because looking at forecasts from the International Monetary Fund, the World Bank, they keep talking about they keep cutting their projection for world growth. So obviously if economies, the developed ones, America, Europe, are still slowing down or haven't picked up, gone to financial crisis levels, it would mean that there's still lower demand, as it were, or weak demand for energy.
Yeah, but then you can say China, India's demand is rising, and Nigeria's.
Well, China, those economies are also being affected. China is still stuck around 7%. India is
Nigeria is
taking several
about,
steps back.
Nigeria is about 7%, and we haven't even done a lot. The potential for growth in this country is enormous, and that's why I keep rehashing the point. We don't even have refineries built, and we're still, under normal circumstances, some countries would probably have packed up, but we're still surviving, and that's the thing. If these policies are just put in place, and we're nearly there, we will get there.
Okay, let's take a break at this point. Come back to talk more on perhaps the PIB. I've been talking to Akin Jones, the head of advisory, Primera African Securities. We've been looking at Nigeria's membership at the Organization of Petroleum Exporting Countries, OPEC. They had their meeting last week, Friday, and decided to keep their daily quota unchanged at 13 million barrels per day. We'll be right back. And the OPEC cartel, and I've been talking to Akin Jones, a financial analyst, investment banker at Primera Africa Securities. Thank you so much, Akin, for sticking around. Now, in the course of, before we went on the break, I did mention at the point that many of these members of OPEC are aware of the vagaries of the oil market. They have actually moved away from complete total dependency. They have invested. We know Kuwait, a classical example, investing in a sovereign wealth fund that's doing so well right now. But we have done that, but it looks like we're things a little bit slow on that side. And also we have to look at the byproducts of the crude, how we can step up efforts to just maximize revenues as it were, while we still dealing with the vagaries of the oil market.
Yeah. I think gas production is key. I think when you think of it, Nigeria could actually produce more gas than it does crude oil. I think we need to invest in gas production, and we need to use that gas to harness electricity. Even if you look at private estates or just smaller estates, some of them have already moved to gas. So we need to learn how to harness both gas and petrochemicals. Of course, this leads back to the refineries.
Refineries, okay. Because I know for the gas, that's still a lot of that is still tied in the PIB.
The PIB, exactly. And another thing we need to look at is the foreign players are leaving. Petrobras wants to sell $5 billion worth of assets, and we saw ConocoPhillips sell its assets to Orlando. So what kind of confidence is that instilling in the markets? Players don't know where the government is going or how it's going to affect their businesses. So the easiest thing to do right now is diversify those assets and sell those assets.
Now, I'm happy that the finance minister was at that meeting, and I'm very happy about the fact that she spoke up and expressed and said, look, she is concerned, about for Nigeria and the rest of Africa, because if we're seeing the shale oil production from the U.S. and we're seeing this almost like a daisical attitude on the part of the major contributor, that is Saudi Arabia. Do you think that this might perhaps spur a sense of urgency on the part of policymakers or the fiscal authorities to move faster in terms of diversifying the economy away from total dependence on oil?
I think our policymakers might have some sense of urgency, but